Did you know a single family in Florence helped invent the modern bank? Their names changed money forever. Today, we'll follow the story of the Medici and other Renaissance merchants, how they transformed simple shop counters into counting houses, and how a few clever papers called bills of exchange became the ancestors of our banks. Let's begin. 15th century Italy was a place of bustling trade. Cities like Florence, Venice, and Genoa stood at crossroads of goods, ideas, and capital. Merchants traveled far, carrying cloth, spices, and coin. Yet money on the road was dangerous. Shipwrecks, theft, and political seizures could wipe out a trader's life savings in an instant. This risk pushed merchants to invent new ways to move value without hauling bags of metal across the sea. In Florence, powerful merchant families rose to meet that need. The Medici, at first cloth merchants and money changers, slowly built a network of counting houses across Europe. They did three things differently. First, they kept meticulous ledgers. Records of credits, debits, and deposits became a trusted public record. Second, they used seals and signatures to prove authenticity. A stamped document, not a bag of gold, could prove a claim to money. Third, they extended credit. Customers could deposit funds, receive safekeeping, and even borrow against reputation. So, a Florentine merchant could leave money with Medici agents in Florence, travel to Bruges or Cairo, and draw on that money through written orders. These were early bills of exchange. The Medici opened branches, hired trusted agents, and acted as a kind of international ledger. Their influence was not only financial, because they financed trade, war, and even princes. Their credit was power. City leaders leaned on their banks, trade expanded, and a new financial class took shape. The bill of exchange, a written promise to pay a sum in another city, became a revolutionary tool. Imagine a merchant in Florence selling cloth to Antwerp. Instead of shipping gold with the goods, the buyer paid a local banker who issued a bill. The buyer presented that bill to a correspondent banker in Antwerp, and the correspondent honored the payment. This reduced the physical movement of cash, and with it, risk. Gradually, multiple endorsements and transfers created networks of credit. People began to accept these paper promises, not because of ink, but because of trust, seals, witnesses, and the reputations of powerful houses like the Medici. Guilds and chambers enforced standards. If your seal could not be trusted, you lost access to credit and access to markets. So what does this mean for us? The core ideas are very familiar. Record keeping, transferability of claims, and institutional trust. Ledgers became databases. Seals and signatures became regulations and verification systems. The systems the Medici helped build evolved into bills, then notes, then bank deposits, and finally into the modern banking architecture we use today. Without that early push toward paper credit, global trade would have remained far slower, far riskier, and far less connected. Key takeaways: 1. Banking began in shops and counting houses. 2. Bills of exchange shifted money from metal to trust. 3. Reputation, not just coins, became a currency. These ideas laid the foundation of modern finance. If you enjoyed this story, subscribe for more. We'll next look at Venice and how merchants learned to share the risks of the sea. Like the video if you learned something new, and tell us in the comments which medieval money story should we cover next. Thanks for watching.